Welcome to the Wednesday edition of Tech Stocks Daily. Get ready for your midweek tech update with juicy tidbits that could shake up your investment strategies. Today we're diving deep into Electronic Arts' big money options trades and why their Q2 results might just power up their stock game. We'll also unravel the epic $20 decillion fine headlining Google's news in Russia and sprinkle in some sweet revenue success from YouTube. Then we'll explore nCino's bold acquisition of FullCircl and what it means for the banking tech landscape. Last but not least, we examine Apple's upcoming earnings report, with eyes on their soaring services and savvy AI advancements. Stay tuned for all the insider info. Hey tech aficionados, today's focus is on the ever-thrilling world of Electronic Arts, making quite the splash in the news, and not just because of another mind-boggling gaming reveal. Yep, this time EA is caught up in a whirlwind of financial maneuvers and strategic victories that are more immersive than a VR headset gone haywire. First up, we're diving into the financial depths with some intriguing, uncommon options trades happening in the market. Big money investors are casting nets in EA's waters, and they're not shy about it. The trading appears bullish, with 9 unusual options activities signaling something brewing beneath the surface. So what's really happening? According to Trade Whispers, there's a 55% bullish sentiment on EA's movements, suggesting that those with fat wallets might know a secret or two about EA's upcoming ventures. Rumor has it, some hefty options, totaling hundreds of thousands in bucks, are being played around price ranges of $100, $60. If these high rollers are to be believed, EA might just have a magical trick up its robust sleeve. Next up, pat yourself on the back, EA, because your Q2 earnings are here and they deserve fanfare. EA reported a whopping $2.025 billion in revenue. They might have just missed analysts' expectations ever so slightly, but let's not dwell on the minor blemish when EA more than exceeds in other aspects. With an EPS of $1.11 beating the anticipated 88 cents, EA is golden. Net bookings also reached $2.079 billion, setting a record for their second quarter. Now let's kick that football into play, because EA's American football franchise is dashing down the financial field. It's poised to rake in over $1 billion in net bookings for the fiscal year 2025, a staggering increase in both playtime and player engagement by over 140%. Talk about scoring a touchdown. And speaking of new horizons, EA ventured into 60 markets worldwide with the launch of the EA Sports FC mobile web store, thanks to a masterstroke collaboration with Coda. The web store aims to simplify gamers' lives by offering exclusive deals and web store-only rewards, making it child's play to snag those in-game items. From Tukes FP bonuses to special packs, this isn't just about playing the game, it's about leveling up in convenience too. Analysts are having a heyday, providing varied takes on where EA's stock might land. Opinion seems to vary between neutral and outperform, with price targets ranging broadly from $150 to $175. If you ask me, EA might just outdo itself, like they repeatedly do in gaming graphics updates. So whether it's the whales in the market getting excited or just strong earnings-related good vibes, EA is a boat you might want to sail on. Games aren't just about alternating realities. Sometimes they offer real-world financial thrills that even the stock market can't respawn. Keep an eye on EA. Future levels promise fresh quests and high scores in more ways than one. Oh boy. Google is really lighting up the news today, with a roller coaster of events that could make any tech lover's head spin faster than a fidget spinner at a tech conference. Let's jump right in with the craziest headline. Google has been slapped with a monumental fine in Russia. We're talking about a figure that's more than just astronomical. It's downright cosmic. The Russian court has asked Google to cough up a chest-tightening $20 decillion for blocking Russian media content. That's right, a decillion is a number too big for most calculators, and honestly, it feels like someone smashed their keyboard when coming up with the fine. This gargantuan penalty emerged from Google's noble attempt to comply with international sanctions. Of course, Google's decision to block various Russian outlets didn't exactly spark fireworks with Russian authorities, and hence, the bid for galactic fines began, like an epic space opera of legal antics. On the lighter and let's say more achievable side of Google's news stream, YouTube, Alphabet's golden child, is flexing its money-making muscles. The platform scored a high five with $50 billion in revenue over the past year from ads and subscriptions. Not bad for something that once cost Google just $1.65 billion to acquire back in 2006. It's safe to say that YouTube isn't just churning out cat videos. It's now a heavyweight in the premium streaming ring, muscling its way into our living rooms faster than you can ask, "Where's the remote?" CEO Sundar Pichai got into the action during Alphabet's third quarter earnings call, hyping up YouTube's shift to big screen experiences like YouTube TV and NFL Sunday Ticket. And hey, it looks like sports content is the MVP. The Olympics alone raked in over 12 billion views and is basically forming a cozy nest on viewers' TV screens. The numbers just keep rolling as YouTube's revenue growth and shifts toward premium content offer major props to Alphabet's financial muscle. And speaking of financial muscles, Google's AI business gives its shareholders a reason to cheer. The company just announced Q3 results that left Wall Street analysts doing a double take. Revenue jumped 15% year over year to hit $88.27 billion, surpassing expected numbers. Alphabet's investment in AI is like raising a pet dragon. The only direction is up, especially when more than 25% of new code at Google is now being crafted by AI. Surprisingly, this turns regular days into high-yield harvests for Google Ads and its broader cloud services. All this humming devices and wires goodness led Alphabet shares to spike nearly 6% in after-hours trading. Somewhere, an investor just high-fived their computer screen, pleasing shareholders, flexing YouTube muscles, fighting epic legal wars. Yeah, it's all in a day's work for Google. Are these headlines dizzying or what? Hold on to your hats, tech fans, because nCino is making some waves. Today's headlines are buzzing with news about nCino, a heavyweight in delivering banking solutions like no other. The company just pulled a double whammy, and we're here to give you the lowdown. First up, the news that's creating quite a stir. nCino has announced its acquisition of FullCircl for the king-size sum of $135 million in cold, hard cash. For those out of the loop, FullCircl is a UK-based SaaS platform that's got a knack for helping financial institutions and regulated companies streamline onboarding, grow revenue, and navigate the rocky regulatory landscape. Essentially, it's the Batman for banks needing some serious help on the client management front. What's extra juicy is that these two companies have already been collaborating since 2023, sharing customers and improving operations for numerous institutions across the pond in the UK. Yorkshire Building Society even jumped in to say how their integrated tech makes loans happen faster while improving the client journey. So why did nCino open their wallet for FullCircl? Well, FullCircl offers a slick business rules engine and a treasure trove of company data crucial for any financial detective show. We're talking news, insights, financial info, and even those scandalous adverse director histories. With this acquisition, nCino is gearing up to wave a magic wand over financial institution processes, not only speeding things up, but also tackling compliance hurdles head-on. CEO Pierre Naudet hailed the move as a strategic leap, eyes set firm on boosting their presence across Europe and beyond. Meanwhile, FullCircl's own Andrew Yates is over the moon about kicking off a new chapter under nCino's wing. But wait, there's more in the nCino saga today. They're also beefing up the management team by appointing Joaquin de Valenzuela as the new managing director for the EMEA region. Joaquin brings a wealth of experience from the likes of Temenos and Salesforce, two names that command attention in the tech and fintech worlds. His new mandate? Accelerate nCino's growth, and with his track record and vision for innovative strategies, it seems they're in solid hands. Clearly, nCino is riding high on a cloud of ambition and forward momentum. Whether it's expanding technological capabilities through strategic acquisitions or fueling company growth by bringing experienced leaders into the fold, nCino is signaling that they mean business. And guess what? We'll be right here, giving you the scoop as they chart this exciting course across the tech seas. Stay tuned, techies, because nCino is certainly a ship to watch. In today's tech news universe, Apple is taking center stage with its much-anticipated fourth-quarter earnings report for fiscal 2024, set to be unveiled on October 31st. And what a cauldron of suspense it is. Investors and tech enthusiasts alike are waiting with bated breath to see if Apple's services and iPad sales can charm away any dark clouds from its less-than-thrilling Mac sales. Let's dive right in. Apple's services arm has been the darling of Wall Street, accounting for a whopping 28.2% of total sales in Q3. From App Store aficionados to Apple TV Plus binge watchers, Apple's diverse subscription roster is driving substantial growth, with net sales predicted to jump 15.4% from last year. Meanwhile, the mighty iPad has been flexing its muscles with an expected sales hike of 8.4%, thanks in part to the suave new 11-inch and 13-inch iPad Air models. However, don't pop the champagne just yet. Mac sales might put a little damper on the festivities, as they are anticipated to dip by 2.4%, according to analytical ghouls at Zacks. With IDC labeling Mac as the worst-performing PC brand this quarter, with a massive 24.2% shipping drop, Apple hopes its casting of new products and growth in other segments will keep investor spirits high. And let's not forget the Apple stock lovers. The market is currently feeling some mixed emotions. The Titan stock has seen a modest 7% growth over the past 3 months, a shade underneath the broader tech sector's 7.3% rise. But is this Cinderella story set for a reverse twist with an earnings beat on October 31st? Only time will tell. For those invested in ETFs, you've probably been keeping watch on funds like the Vanguard Information Technology ETF, MSCI Information Technology Index ETF, and others, all of which heavily feature Apple. With Apple's price target showing varied flares from $184 to a staggering $300, everyone's buckling their seatbelts for a potentially thrilling ride. Let's talk software for a moment. The release of Apple Intelligence, their much buzzed about AI suite, is stirring quite the excitement. Available on the latest iterations of their devices, iPhone, iPad, and Mac users are getting a slice of the AI pie. Rumor has it, these features might just be the gadget guru's next big leap, keeping Apple at the forefront of tech wizardry. So here's where you come in. Whether you're an eager investor or a tech tinkerer, I want to know what think. Are Apple's growing services and AI launches enough to say touche to slumping Mac sales? Will Apple's October surprise treat us to a sweet rally? Drop your thoughts in the comments and let's brew up a tech talk storm. All right, techies, let's put on our investor caps and dive into the world of Electronic Arts stock. With today's buzz about EA's financial triumphs and a hint of upcoming shenanigans underneath its stock surface, I'm leaning towards a recommendation. Let me spill the beans, but don't forget, always do your own research before making moves with your hard-earned cash. So why a buying frenzy for EA? Here's the juice. Firstly, the exciting unusual options trading surrounding EA and its bullish sentiment imply that seasoned investors might know something juicy is cooking in EA's plan pot. Secondly, EA's strong second quarter earnings mean they're hitting the financial high notes, with revenue close to analysts' expectations and a delightful EPS beat. Plus, who can ignore their mega-popular American football franchise sprinting towards $1 billion in net bookings? That's like scoring perpetual touchdowns in the financial game. Additionally, EA's strategic avenues are expanding like a mythical narrative in an open-world RPG. Their move to launch the EA Sports FC mobile web store not only multiplies gamer engagement, but also taps into monetized convenience wrapped with in-game glittering offers. Despite some analysts showing neutral stances, those encouraging forecasts of price hikes well over $140 make this a compelling action flick to be a part of. However, remember, the scores can change, game worlds and stocks alike. So there you have it, a stock adventure to ponder. Any decision in tech investments can be as tricky as deciphering gaming Easter eggs, so do your research, consult multiple sources, and happy investing. What a thrilling day in the tech world, folks. We've got Electronic Arts stirring up excitement with unusual trading activity, a promising Q2 earnings report, and some strategic digital moves that seem destined to take them higher. Google, not one to be left in the shadows, faced a laughable astronomical fine in Russia, yet balanced the scales with impressive YouTube revenue growth and continued AI success. Over at nCino, we're seeing a strategic leap with the acquisition of FullCircl, fueling ambitions across Europe. Meanwhile, Apple is the talk of the town, with upcoming earnings in the spotlight, boasting strong services growth and new AI offerings, all while keeping fingers crossed for a stock boost. If you enjoyed the scoop and want more tech goodness, don't forget to hit that like button, subscribe to the channel, and share the video with your fellow tech enthusiasts. Join us again tomorrow for another round of tech updates that keep you ahead of the curve.